This is the Daily Market Comment by Haralambos Pisuros. I'm Christina Marujos, and thank you for joining us at xm.com. The dollar continued to trade higher against most of the other major currencies on Wednesday, perhaps as traders further liquidated short positions after last week's tumble. However, the greenback was sold again this morning, and its fate now lies in the hands of Fed officials who are meeting next week to decide on interest rates. Although a 25 basis points hike is nearly fully priced in, for the currency to stage a meaningful recovery, policymakers may need to find a way to convince market participants that this may not be the last time they push the hike button and that no rate cuts are on the agenda for 2024. Those trading the dollar against the euro will likely have a much more difficult time deciding how to act, as apart from the Fed, they will also have to evaluate the outcome of the European Central Bank decision. Governing Council member ECB Stournaras was the latest member to join the chorus of policymakers pushing against the September hike, saying that only one more quarter-point hike should be enough. President Lagarde's post-decision press conference may attract special attention, as investors will be eager to find out whether she remains hawkish, dismissing the Eurozone's economic slowdown and prioritizing getting inflation in check. The pound was the main loser yesterday, suffering on the back of the lower-than-expected UK inflation data. Traders continue slashing their Bank of England hike bets throughout the whole day, assigning a 70% probability for a quarter-point hike at the upcoming gathering. The yen came under pressure as well, perhaps as traders continue scaling back their bets of a policy shift by the Bank of Japan at next week's gathering, after Bank of Japan Governor Ueda said that there was still some distance to achieve the 2% inflation target sustainably and stably. The Aussie was the morning's best performer after Australia's better-than-expected employment report for June increased the probability for another hike at the Reserve Bank of Australia's August meeting. All three of Wall Street's main indices closed positive yesterday. However, after the closing bell, both Tesla's and Netflix earnings results disappointed, with future contracts on the tech-heavy Nasdaq pointing to a lower open today. Although Netflix reported better than expected earnings per share, revenue for quarter two fell short of analysts' estimates, while Tesla's gross margin was much lower than a year earlier. Both companies are expected to experience a slowdown the second half of the year, and this could translate into decent corrections on Wall Street if more tech firms report a similar trend. This was a Daily Market Comment. Thank you for watching at xm.com.